Oh, good. Let's start with some wins. So Eric, you're just about closed on your house, huh?
Yeah, close tomorrow, and then we head down next week. So probably gonna be Wednesday, Thursday. Just signed today, and then had our first Florida closing today too, which was nice. So able to get a seller up here that we represented the buyer up here as well, and then we were able to get him a house down there. So
Already, dude. Hasn't even moved yet, and he's already closing a deal in Tampa.
yep, I already have a couple down there, so it's nice.
That's amazing. Good stuff, man.
Yep.
Mr. Kevin, what's going on?
Hey, Randy. Trying to think of a win recently. My dad and I are going to experiment with Facebook ads for generating leads. He actually signed up for this course doing remote wholesaling, and that's how they basically generate their leads, is through Facebook ads. So we're going to experiment with that.
Got it. Good
Yeah.
stuff. How about Mr. Wade? Any news on the offers you're putting out?
Yeah, so two of them fell through, just got outbid. The funny thing is I kind of started the discussion prior to our last Zoom meeting where you guys gave us all that info. So I learned some tricks definitely at the last Zoom meeting. But two of those fell out, just overbid. One of them I'm still working. It's a like a tired landlord lead. They are a little bit older, and the husband's a little more kind of stuck in his ways. So it's taken a few more touches than I thought, but I think I think I'm doing right by them. I think I've got them going in the right direction. So still working one. The other one is in a probate, still in probate deal, locked up. The judge he didn't like something the lawyer submitted, so it's still kind of locked up. But continuing the marketing, I think I'm getting my plans and my processes in place to continue that on a regular basis. But it feels promising.
Awesome.
Yeah, you gotta fix a lot of offers, man. That's just the name of the game.
Yep.
Valley, I see you here. I want to congratulate you. I've been seeing you closing deals.
Yes, exactly. Yeah, I got 3 listings coming up, and I got 2 buyers coming into town from out of town in the next couple of weeks. So yeah, lots of things happening, which is awesome.
I'll be you're actually on my calendar to reach out to you, I think next week. I want to talk to you about an opportunity since you're crushing it over there. I think New Mexico, right? Is it New Mexico?
New Mexico, yes.
Oh,
Las
I remember.
Cruces and southern New Mexico. So yeah, we kind of spread out in New Mexico. So yeah.
That's awesome. Yeah, I'll reach out to you. I want to talk to you about some stuff.
Perfect.
But, great to have you. Good stuff. Keep on crushing it. And we got Alex. What's up, Alex? Alejandro.
Let me unmute myself here. I dropped off my daughter to Lubbock last week in Lubbock, Texas. So Texas has gained a new resident and California has lost another resident. She says she's not coming back. She's going to be starting Texas Tech in August. She's going to be majoring in animal science. She wants to be a large animal veterinarian. Let's see what else. I'm selling. I teamed up with an agent in Bakersfield to sell my ex-wife's house. We're expecting to get inspection and appraisal contingencies released, and it's scheduled to close on June 15th. So I'm really excited about that.
Awesome.
I have had a listing appointment in Corona. This is the first time where someone has committed suicide in the house, and he hanged himself. And, we have to disclose that and the matter of death. So, explain that to the 2 co-trustees, but, explain to them that, any house can be sold. There are certain cultures that, will not consider it, but there are other people that just don't care that, if it's a good deal, they'll buy.
Oh,
So
wow.
it's all,
That's a good one. I mean, good one. It's crappy to hear, but meaning a good case study.
yeah.
That standpoint, I sold a house where someone got killed in a house or actually, well, that one, but there was another one up in Chico where someone passed away and the body decomposed, was not found for weeks,
Hmm.
right? So I had to disclose that. So I chose this is the route I chose. I mean, there is no right or wrong, but it's it's tricky, right? Because do you talk about that in the private remarks, right, when you're listed, or do you let the buyers submit offers and then before you accept the offer, then let the agent know and disclose everything before fully accepting and going into escrow? I chose the latter. I chose to not talk about it until I got all the offers in and the most excited buyer or two. Then I went to those buyers or agents and said, look, here's the deal. I want to tell you everything about what happened up front. Everything is cleaned up. You know, I started with good news, and you know, I kind of mixed the good news with bad news, right? And this particular buyer didn't care, but I so agree with you. Some buyers would just completely not want. But then another buyer that was in the running, they did not want it because of it, right? So I don't know. I chose it that way because now that they submitted the offer, they might maybe talk themselves into getting it despite the bad news, potentially.
Mhm.
Versus disclosing it right away on the MLS for the agents, and then the agents talking out their own buyers out of even looking at it.
Yeah.
Like that could also be the case, right? So anyway, I don't know. So it'd be, are you getting this listing? Is it confirmed?
Not yet. They said they were going to interview 2 more agents. So
Got it.
yeah, they're 2 ladies that are co-trustees. One of them called me. I was referred to her by a former client of mine. They had a good experience with me, so they're like, you got to use Alex. And so she wanted to use me, but she's like, look, I have a co-trustee that, you know, she wants to use this other agent. When I looked him up, he's fairly new, doesn't have many sales. So I know that if it was just between he and I'd probably would get it, but you know, I don't know who the third person is that they're going to consider. So
Got it.
yeah.
Well, let's see what happens. Keep us posted. But
I'll keep you
and I'll
posted.
finish on my win. I think it's closing today. There's a lot of emails going back and forth, but man, it's just the power of referrals and just building your network. I actually helped a friend that lives in Florida. He's got family in New Jersey. He asked for my help in helping him interview commercial brokers because his family wanted to sell a 75-unit apartment building in New Jersey, and that should be actually closing today. So I did help interview brokers. We picked the broker. I signed a referral agreement with that broker at 25% of the listing side, which is not bad on an $11 million sale.
Heck yeah.
So I'll be getting a referral check that's in the 30,000s. And I didn't sell anything. I mean, I was involved and I wanted to, honestly, because I wanted to learn, because I haven't really sold a 75-unit apartment building. I think the most maybe was 6 or 8. So it was cool to watch because I was part of all the emails, a lot of conference calls. But yeah, it's just cool. Like what you can do with your license, you can refer a deal like that and make a nice referral check. So that's my win. But
Heck yeah.
more exciting news is let's get into today's topic. So
Let's do
Eric,
it.
why don't you introduce the topic and we'll roll with it.
Absolutely. So this is a topic that's been it's been big since pretty much last March. We've seen interest rates kind of steadily rise since the last year. About a year ago is when rates started going up. After the pandemic, we had hit historical low rates in the 2%, and that's part of what caused our housing market to boom. There was a bunch of free money kind of floating around there. And just recently, actually last week, me and Randy were kind of talking about how crazy and volatile these rates have been and how it's affecting our market, because rates going up and down have a huge impact on not just investors or not just agents or retail buyers, but also investors, because it really is a huge portion that the buyer has to mentally hurdle to get over it. So we're going to be talking about how these interest rates going up and down affect investors, how they affect agents, and how they affect the market as a whole. So definitely excited to talk about it. It's something that I think is probably the most relevant talking point we can have right now in terms of the market.
And I would, I would add, I talked a lot about this topic with my local mastermind, especially last year, as many of you probably remember, right? Rates were in the low 2s. And then all of a sudden by November, October, we were in the 7s. It's from my understanding, it's the second, if not first, highest jump in such a short period of time in history. So that was really challenging too, because when you started putting these numbers into calculators, it was scary to see how much that impacted the values of properties. So I really, focused in on that. Now it's not as bad because we had about a 3 to 4 month run where the rates kind of settled into the 6s, right? And then FHA, VA, you could even get them in the, high 5s. But when things settle, people get comfortable and kind of feel like this is the new norm. And we've been in that boat for about 3-4 months since about, I would say, like mid-January or February till now. Until now, rates in the last month actually jumped all the way to 7s, and which equals to about a point jump, right? In about a 30-day period. And this is where people start kind of, they freak out, they freeze, they stop making any serious decisions until they again see things settle. And the new settle could be in the 7s, right? If it lasts for a longer period of time, which is usually 2-3 months, which again, that could just mean like, okay, well, 7s is the new norm. If I want to buy a home, let me get into the market, right? Yeah. But that will do something to values, and anywhere you look at it, it should, right? Or at least we should assume it will, especially if you're an investor in this volatile market, right? Or if you're an agent representing investors, that's the way you want to think about it. How do I get into the market and help my investor clients, but protect their profit, right? Because 1% can literally wipe out your investors' full profit that they were looking to make in the next 2 to 3 months when they flip the property. So anyway, so today it's not going to be as crazy because it's 1%, where last year, man, we were talking about 3% comparing. So, but it's still a lot. So we'll get into that. So go ahead, Eric, keep going. I want to just add that.
Yeah, no, so, and I talked to all my investors about this last year when we were seeing the rates increase because we knew it was going to have a pretty dramatic effect on the market. Now, what's been surprising, I think, for everybody is the fact that we went from those low 2s to the 6s and 7s, and we're still seeing, surprisingly, in most markets, appreciation or staying stagnant with pricing and not the drop off you would expect to see with those interest rates. And I think it still has a lot to do with demand and a bunch of other factors, but interest rates are really hard to nail down because there's so much that's going to affect interest rates. It's not like it's tied to just one marker. It's not like interest rates are just tied to, surprisingly, they're not tied to the Fed rate or the Fed bips, the raises that happen there. There's so much that goes into it, including what people are, just the macro economy. So it's really hard to keep an eye on it. It's really, you're not going to be able to predict it. People who try to make money predicting it don't. So the one thing that we always like to do locally is we find a really good lender that we partner with, a referral partner. And I call typically once a day, but sometimes even once a week. And I just go, hey, what is going on with, what are we seeing in terms of rates? What are you seeing in terms of, with these rates? Are we seeing changes in your applications? Because all my loan officers track how many applications they're going through every single week. So we go, hey, rates jumped up. Are we seeing less applications? I take that information that's given to me and I throw it back to my investors. So I try to keep them as up to date as possible as well, because if we're seeing those rates go up and applications going down, there's less possible buyers for their properties. We're seeing a little bit of a cool down when that happens. When rates go down and applications increase, I go, hey, maybe this is the time. If you've got a project that's a week away, let's hammer it home. Let's get it done. Let's throw it on the market and take advantage of this while we can. So rates right now are really volatile. That's one of the things that's probably the most concerning with us is it's not like even if they went up to 7% and stayed there, that would become the buyer's new norm. That would be their new mindset. But it's going 7%, 6%, 7%, 6.5%, 7%, 6.5%, 6%. It's bouncing around. So buyers are really kind of apprehensive, and they really want to wait it out until they feel like the rate is low enough to make that purchase. And part of that's because the interest rates make a huge difference. Like, and we'll talk about this here in a little bit, but if a rate goes up 1%, we typically, the rule of thumb is 1% increase or decrease as a 10% increase or decrease of your purchasing power. So at a 6% rate, if you're buying a $300,000 house, if that rate goes up to 7%, you're now approved to a $270,000 house. So that's a pretty large jump we have to look into. And it makes a huge difference. It like buyers, when they're getting pre-approved, they go, okay, I'm pre-approved for 300. Rates go up 0.5% to 1%. They go, okay, my purchase price is now down 5 to 10%. There's less properties that fit the budget that I wanted to be in. There's less properties that match that mortgage payment I want to be at. So that's like one of the main sticking points.
What I would add is, I think you bring up a good point, right? It's one thing to look at what you're seeing on the screen now, right? Mortgage News Daily is one website that I just have as a tab always open, and I look at it every day just to see. And when I see more red in the last month, right, that's usually means not a good thing, right? Rates are going up. There will probably be some impact on values, right? Most likely. I was also assuming that, you know, in January, February, when rates were creeping up to 6s, but guess what? In San Diego, as an example, it did not affect the values, even though we might logically think that it would, because inventory was dropping. Inventory was dropping, and the rates were kind of settling into the 6s, and we never saw an actual slowdown from January to February or March, as some would be expecting, at least here in California. Now in Vegas, where I have some agents, different story, right? So it's a very specific to your market, how things get, you know, how rates will impact you. But I definitely, besides just looking at Mortgage News Daily, absolutely check with your lender with a quick text, because same thing. I heard this from our lender, Felisa. She's like, my applications are at the lowest since I can't even remember, right? Over the last week and a half. That's a sign. But when I checked in with her maybe 2 months ago, when the rates were in the 6s, she's like, no, like we're freaking getting applications like crazy, like, right? And the rates are in the 6s, technically double of what it was a year ago. So don't just look at the rates and assume something automatically. Look at it. Yes, think about what this could mean, but then also check with your lender, because that will tell us the future, right? That's what we are as investors. We're trying to operate based on future projections, right? Because we're buying today and we're going to be selling. If you're wholesaling, it's a different story. But if you're rehabbing, you're going to be selling it in 2, 3, 4 months. However, if you're wholesaling, guess what? You got to wholesale that to a rehabber. And a good rehabber, what do you think they're doing? They're going to be looking at it 3, 4 months in the future too, and start making their decisions from that number backwards, right? Which will then impact your wholesale fee, which means you might not be able to wholesale that property, right? Because you're basing it off today's comps. They're basing it off the comps from three months from now, which might be pointing to a decline just based on pure stats and logic for now, right? Let me show you actually visually what this actually means in dollars and cents. And I would actually do this with clients. This is really good to actually do a visual with them, so you're not just talking about it, right? Number one, you can pull this up so they can see how the rates are fluctuating, right? I like the top of this website here. You can actually zone in on as much of the data as you would like. So let's say we want to, let's see, 2022, and let's go July 1st till now. Boom. Now the graph adjusted, and it's only showing me what I put in that date range, right? And I can see that the peak was right here. And it's cool. I can scroll with my mouse and it will tell me exactly the rate at that given moment and the day. So October 21st was our peak, 7.3 for a conventional loan. And then, of course, we had a drop. As we know, this is where things picked up. Inventory was dropping and rates were dropping. Perfect combo for appreciation, right? And then we were thinking that right here, that we will not have multiple offers essentially when the rates started going up, but that didn't really impact it at all, even though we got pretty high into the high sixes here. Then it back dropped again. And now, as we know, we're above sevens in most markets, which is very close to the last highest we had in October. So this is good to just show us a visual, but it's even better to show it from this standpoint, especially if you're an agent working with investors, or if you're an investor yourself, it's good to play around with this yourself. So all y'all would do is pull up a mortgage calculator. This case, doesn't matter which one, there's so many of them. We just pulled the first one that Google search spit out for us. And let's assume I'm in Cincinnati, Ohio, where Eric is, and my ARV is 300,000. And once I rehab this property, the buyer is going to be putting down 10%, 30-year mortgage. And they were looking at this property a month ago when the rates was 6. Okay. So these people were excited. These buyers were excited to get into the market at 6% for a $300,000 purchase price, because they were like, look, this $1,600 payment we can afford. Like, we are good with that. I did not add property taxes and homeowners insurance and all that on top of it, because that will vary from state to state. So I want things to be pretty constant in terms of what we're actually evaluating. So we're only focusing on the principal and interest for the actual mortgage payment, okay? And then the rest we're going to kind of set aside. Of course, the monthly payment will be higher than $1,600 when you add all those things, but I want to just start with what we're actually covering here for the basis of the case study. So if the payment that they're comfortable with is $1,618, well, then something happened in family events. They needed to go away for 3 weeks. They come back to town and say, Eric, all right, we're back. We're back. We want to look at those homes at 300,000, right?
Yep.
Well, Eric, if he's a good agent, he's going to be like, well, you should talk to your lender and see where they're going to price you out at, because rates have jumped by about a 1% in the month's period. So they talk to their lender, and this is what the lender quotes them at 7%. Now their payment is $1,796, up about $180 from where they were a month ago when they talked to Eric and got excited about buying that $300,000 home.
Yep.
Now they're not so excited. Now they're like, well, Eric, well, we don't feel comfortable with this payment, right? Well, what is Eric going to do? Well, Eric can offer 2 options. Be like, look, we can try to get a buy down. Not everybody might be willing to do that right now, but in a slower market, that's obviously is going to be the case. That's how it was end of last year. Sellers were doing buy downs left and right? So we could do a buy down or request a buy down from the seller of the rate, so we can lower your monthly payment if we buy this rate down. But buying down a rate is not cheap, by the way. Okay, it's pretty pricey to buy down rates.
Yep.
Okay, or they say, well, we're going to be comfortable. What's the number, Eric? If we're going to use the 7%, what range are we supposed to be looking at homes wise? Well, if you apply the 10%, it actually works out perfectly, because look, 270,000 versus 300,000 that they were looking at before, it will get you to the 1616, which was $2 off of that one, right? So we're at 1616. So we're exactly at basically the same payment, but we're now $30,000 less. And I can guarantee you, if I'm a flipper in Cincinnati, I would be actually very happy to lock up a flip with a potential to make a $30,000 profit. That's a very healthy profit if I'm operating that market. I've been making, when I was flipping homes in San Diego, I was fine sometimes making 40 grand on an $800,000, $900,000 home, right? Yeah. So to make 30 grand on a profit in Cincinnati should be pretty healthy. But it's not healthy if the market adjusts by 10% because rates going up by 1%. Now, will that happen automatically because rates went up to 7 and the market all of a sudden in a month will crash by 10%? No, it takes time for things to adjust. It might not even happen, but we have to operate as if it will. And we then use this data to talk to the listing agents of the properties that we're going after to let them know, why are we submitting an offer at this number? And if you've been attending and listening to these trainings, you already know we always have to start from the end in mind. So if you don't agree on the ARV with the listing agent that you're using to calculate your purchase price from, then you're gonna sound really bad with your offer. Like we're already in the industry sound bad and they think we're lowballing. Now, if you don't agree on the ARV, that's even worse, right? Because now you're 10% additionally potentially off on what they think the ARV will be in 3 months, because they're not even taking into account a drop, but you are, as you should if you're a good investor and taking all these into account so you don't lose or work for free essentially or lose money. So I would start by first asking the listing agent, what's their mindset? How are they operating in this market? And asking them questions, not to make them feel less than, but instead just be like, look, I love this property, Mr. Listing Agent. And a lot of you guys probably know, like I'm a huge proponent of going directly to the listing agent. So my conversation would sound something like, hey, I would love to submit an offer on this property with you. I've analyzed it. I went to the property like I told you, and my ARV, if the rates didn't go up by a point, my ARV was going to be 300, and I would have been able to submit an offer at X. However, as you know, rates went up, a percent. They're trending in that direction. I have to take that into account now, that this is the trend and it might stay that way. I don't want to get caught with this helm and lose money. So what I have to do in order to continue doing business long-term, I have to take this into account, which means I'm going to have to reduce my ARV from 300 to 270. And that's the number I'm going to be using to come up with my offer amount. Does that make sense, Mr. Listing Agent? Yes? Yes, totally. I totally get it. Like I need them to approve what I'm about to do, right? Which is submit an offer with taking that into account. Yeah. If you don't, I'm telling you, it's going to be a really tough time for you to get your offer accepted, because we can't assume that the listing agents are communicating all of this to their clients. But if you communicate it to them and they're representing you, I can almost guarantee you that they're going to probably relay some of that messaging to their seller when they show my offer to their client and why it's lower than maybe what they would have anticipated, right? Yeah. Because I brought it up, I educated them, and I showed them proof, which I would love for the agent then to take these calculators. You could even take a screenshot of these, send it over so they could actually use it with their listing agent. My goal has always been, what can I provide to the listing agent so their job is easier when they go and talk to their client to go to bat for me, the investor? Yeah. How can we do that? That's how we do it. You want to add something, Eric?
Yeah, so I was going to say a couple things on that point. One, it's what we're going with is that's still such low inventory that at least as of right now, these interest rates aren't having the same impact that we'd see if we were in a more balanced market. If we were in a more balanced market, you would have more homes on the market. And if these rates were swinging like this, buyers would say, okay, that's fine. That prices that rates have gone up. So now I'm 10% less. So instead of looking at $300,000 homes, now there's 30 other properties at the $270,000 price range that I'll go ahead and consider. So there's choices, there's options. What we're seeing with a lot of our clients is even with these rates going up, yeah, they're like not happy that their payment's getting higher, but they're also like, there's nothing else inside of my price range. So you know what? I'm just going to have to stick with it and try and find something. It's still better than paying rent because then I'm not paying down anything. So I think until we see this supply issue kind of work itself out, or if it does work itself out, these rates will have an impact, but it's not going to be as large of an impact right away. And something else to consider is rates kind of play into the demand being off kilter, because I have phone calls every single day with sellers, and it's like, they're like, I want to sell my property. What is the payment on a $300,000 home? And when you tell them that, they're like, that's ridiculous. I'm locked in at a 2.5% interest rate. Why would I sell? My payment is significantly less than that. And now it's becoming unaffordable, even with taking the equity from their home and purchasing something else. So it's kind of a weird dichotomy right now where we're dealing with rates are keeping sellers in their houses, but because of that, it's also keeping buyers from buying houses and balancing out the market.
And I think it's going to come down to, like, you know, some investors are a little bit more, take more risks, right? Some investors will take more risk and say, look, Randy, I understand. Thank you for educating me on that. I'm going to go in with an ARV of 5% lower. I'm going to take my chances. Maybe I won't lower it by 30 grand. I'll lower the ARV by 15. That's fine, right? You could do that. I really want you to know, if you're the investor yourself, I just know the investors I deal with, like, I will tell them, like, look, I would rather have you not buy this if that's what you're planning on doing, because I don't want you to be out of business, because that's the reality. Like, once some of my investor clients lose money once or twice, like, they could be completely out of the game, right? So it's ultimately their decision. And I think what happens a lot during this type of time, like literally right now, is a lot of investors, they know that they just won't get offers accepted, but they're going to stick to their guns, and they're going to stick to their 10% reduction and be okay with the fact that they're going to get a lot of no's, right? But they're going to watch the market and see what this will do. Is it going to stay in the 7s? Is it going to come down to the 6s? And then they're going to make decisions. So decision-making literally happens weekly, on a weekly basis in this type of market, right? Because of course, I don't also want investors not to get offer deals, right? So to be so conservative, then you basically get nothing, right? But if you keep watching the market and weekly make adjustments, maybe the 10% on the beginning starts as a 5. But then if that trend continues, then you increase it to 10 on the reduction. And look at what this looks like from California, because this is my market.
Oh, ouch.
900,000 is your typical single family, you know, first time home buyer home price point, right? Median. 30 years, 4,856 is your monthly payment. At 6% a month ago, if it was the same case study like we talked about, where someone was looking to buy a property here with me a month ago, they came back end of this week and they're like, all right, we had to go away. We're ready to buy again. Rates are in the 7s. What does that mean? 5,388. What was that other payment? 4,856. So what is the difference? We got 400 here, and you got 250 here. So about what, 650 roughly?
Yeah.
$650 change in a monthly payment in a matter of 30 days when they went back to their lender to recalculate their approval. All right, well, I'm going to say the same thing. Look, we can't necessarily assume that a seller is going to give you a rate buy down. Now, that doesn't mean we're not going to look at homes on 900,000. We will, and we're going to ask for the buy down. But realistically, let's see what you can actually afford right now if you did not get a buy down. And what that would be, if I get rid of this right now, 7%. And I don't know why this changed.
You have 20%.
I know this changed on its own. I don't know why. So let me recalculate. There you go. So it's 7, and then if I reduce this, oh, I know why. 810. There you go.
And you threw in property taxes again too.
Oh, what are you doing to me? All right, 4,850. What was that initial payment? 4,856. Boom. So the rule of thumb holds true again. If you take 10% of 900,000, that's 90,000. You subtract it from that. That gives you a purchase price of $810, right? Which brings my payment back to where I wanted it and where I was comfortable with as a buyer with the new 7% rate. Okay. So now again, as an agent, I would tell them, look, I'm not gonna stop our search at 810,000 or 820. I'll still keep it at 900 with the hopes that we can buy down the rate. But if we can't, then know that your monthly payment is going to be much higher unless we can get you into the house at $810,000 purchase price.
Yep.
Right. So that's how huge of a change that is. Right. And for a flipper to make 90 grand on a flip in San Diego on 900,000, that's really, really good. Right, Kevin? Right. You would probably be okay with 45 if I were to guess.
I'd be fine with that.
Right. Yeah, like that's it. I mean, because if you're not getting deals here in San Diego.
Yeah.
Right. So imagine that. Imagine Kevin bought this house, assuming 900 ARV with a $45,000 profit margin. And then the rates change and 2 months go by and it settles there and the market adjusts by 10%. How much is Kevin in the negative now? Minus 45, easy math.
And
right. It swings really quick. It's scary, but it's reality, and we have to take that into account and use data. Don't just talk about it verbally, actually use it, show it, and send it. Don't assume agents know. I'm gonna repeat that again, right? Because I think a lot of investors out there and agents just assume that all the listing agents just know all this stuff. There's so many new agents out there where they literally, a listing falls in their lap because their friends and family, like literally like my buddy Rick, who's an agent on my team here, first listing is an hour and a half from his house that I helped him list together. But if I wasn't there to help him, that would have been his first listing, an hour and a half away. He has no idea what he's doing, and he's listing his first house that needs work, like in San Bernardino County, and he lives in San Diego. Like, do you think he knows all of this perfectly yet? Absolutely not.
Yeah.
And this happens all the time where brand new agents, like, they get a listing that falls in their lap and it needs a lot of work, and you investors or agents that represent investors are going after that listing, and you assume they know all this stuff, that they know how to present this. They do not.
And aside from flipping, you have to think about, for our buy and hold investors, your cash flow gets killed, like absolutely killed, when these interest rates go up. So something that's cash flowing, and right now it's tough, even the Cincinnati market, where cash flow is one of those things that we've always, like, we pride ourselves on that, because we're a Rust Belt city. So cash flow is what most people buy here for. It's almost impossible to cash flow on any property. I mean, even all of my buy and hold investors are like, I'm just going to hold off, because when rates went from 2s to 6s, and then you include these prices, that $300 to $400 cushion that was cash flow a month after all expenses and setting aside some emergency funds disappeared like that. So when these rates go up 1%, you're looking at about 10% of the monthly payment is also what ends up being. That 10% is normally what's the cash flow. So when it goes from 6% to 7% a month, even if you were able to find something that was going to cash flow at that time, it no longer cash flows because of that. So it affects more than flippers. It affects wholesalers as well, like Randy was talking about, because who are they going to sell it to? If you're taking into consideration these rate increases, which all investors should do, it's going to be a little bit harder to wholesale that property unless you have got it at a really good deal. So interest rates affect all of us at a larger thought than we think. Now, right now, it's just a little bit compressed because of supply and demand, but keep an eye on that, because if that starts to change, what we're going to see is these rates are going to have a bigger play in terms of, like I said, if there's more properties on the market, you've got more options as a buyer. So,
I would add one thing, and then we can do a breakout, is which we'll finish on this actually. So this was a conversation we had end of last year a lot. Kevin knows, because he's in my market, right? We were drilling on this. If investors got stuck with properties, right, you were better off offering a buy down of a rate than simply reducing the list price or purchase price, if you even got a contract, by, let's say, 10% of what you were anticipating getting 4 months ago, right? It's always going to be cheaper, right? So you might in our example of Cincinnati, you might be able to take 300,000 and say, look, Mr. Buyer, or in most cases, you're speaking to a buyer's agent and say, look, thank you for submitting your offer at 270,000. I understand where they're coming from. I know they're getting a loan and they're making their decisions based on the monthly payment, of course. And the property is listed at 300,000, right? I would love to get as close as possible, of course, to that number. Like I told you, I don't have to sell, right? In many cases, a lot of investors, I would teach them that start looking at other options. Plan B would be like Airbnb or 30-day rentals. So if I'm representing you as an investor, I can say that in my negotiations and say, look, my investor actually doesn't have to sell, right? They're looking at other options. But if we can somehow meet in the middle and keep your client's payment the same, do you think that would be something that we can work out with your client? And in most cases, they'll say yes, because we're a payment-driven society.
Yep.
So if I can give that buyer 15 grand instead of 30, reducing it from 300 to 270, if I can give them 15 grand, so they go buy down the rate to reduce it by 1% to get them right back to the monthly payment they're looking for, but I receive 285,000 instead of 270, right? Does the math add up there? Or am I, hold on, 285?
You'd be at like 300 with a 15 buy down, and then it'd be about a 285 take.
Yeah, so 300 with a 15 buy down, get them to 1%. And basically that my goal is always going to be to get their monthly payment to what they were. So in this example, you got to ask more questions to understand what is the rate they have currently, what is their monthly payment. This might include you talking to the lender with their permission, which we should anyway. If you're a listing agent representing sellers, you should be talking to lenders, especially in situations like this, where you're trying to make the deal work, right? And figure out what is that sweet spot, right? Asking the lender, look, if my client gave and bought down the rate for this borrower by 15K, where would that put him? Oh, it would put him at this amount. Perfect. That's what I'm trying to get him to. And then you adjust your purchase price maybe by only 5,000, maybe by only 10,000, right? But ultimately, it's always going to be cheaper. That's all I want you to know, because it's a lot of numbers, right? All I need you to know is that it's always going to be cheaper. From what I saw, is that to buy down the rate, then reducing it simply by that 10%, as we just showed you in our example. Okay. And I'll end there. Anything you want to add before we do breakout?
No, I think it's great. I think the last thing I would say is just something you need to follow up with. Talk to lenders above all in terms of rates, see how busy they are, how many applications they're doing, what they're hearing from their buyers. I have like 3 or 4 agents that I can call, that I do call every week, and have about an hour-long conversation. How's business looking? How are the applications going? What are you hearing from the prospective buyers? And it always gives me an idea of like, applications dropped off and a lot of the buyers have cold feet. And I also find out like, hey, a lot of the buyers are, if they didn't lock their rate, are backing out of contract because the rates have gone up and the payment's just unaffordable. So I have those conversations, and I have people on like my team that are loan officers that I have those conversations with. And I try to every single day, but at least once a week.
Cool. All right. Well, these are probably going to be two small breakout rooms. A couple of people dropped off, but we'll see how many of you are able to do it. If it's small, oh, now we're down to 10. All right. How about we're not going to do the breakout room, because I don't want it to be 3 people. Let's make this our breakout room, if that's the case. So let's open it up for questions. And also, what can we help you with, since we have time too? What were you going to say, Eric? You were like,
so this was going to be something I was going to talk about when they're in the breakout room. One of the things that I've talked to about with one of my hard money lenders is like, we're trying to figure out where some of what's going on is going to change, because I just don't think it's going to keep going the way we're going, with low supply, high interest rates, the payments are crazy. One of the things that it's a really interesting conversation. This new debt ceiling that passed, one of the things that was in there was student loan repayments kicked back off in September. So the end of the repayment pause ends in September for the first time since COVID kicked off. I'm like, super interested to see how that affects everybody and their payments, because a lot of people don't realize that student loans are one of the highest held debts in the United States. And it's been something that has remained off to the side. And for a lot of people, the average payment, I think, is $300 or $400 a month. Doesn't sound like a lot, but when you've got a mortgage and a car payment and all these other bills, and now credit card debt's hitting the highest, be really interested to see how these student loan repayments come September have an effect on people being able to make their mortgage payments, their car payments, and any discretionary spending. So,
I would add, I'm listening to a lot of podcasts, like on the economy and where they think things are going, and majority do think that we might be seeing rates in the 8s.
that's
That
what I've
we're
heard.
not out of the woods inflation wise, that they just simply put a band-aid on stuff over the last few months, that I don't know. So I just caution you. That's all. Again, not from a fear perspective, more from just keeping an eye on things on a weekly basis, submitting offers, sticking to your guns, whatever your gut tells you, right? And apply some data, of course, to it. But educate yourself, not just from us, but listen to different economists that are out there and just kind of how are they arriving at some of the conclusions. But right now, I would say majority are saying that it's going to get worse before it gets better. And this was more of kind of like a band-aid that created this little appreciation bump that we saw in, I wouldn't say most states, but in a large number of states. I'm not going to assume that this will continue. If I'm an investor in San Diego, at least that's how I would operate. And I would be taking off 10% of my ARVs right now with that assumptions based on everything collectively that I've been listening to and the data.
Yeah, it's really easy to kind of get to the point where you're like listening to things. It's really easy to I get really pessimistic when it comes to it, but it'll be really interesting because if you just think about rates going from 2 to 6%, we were just talking about 1% interest increase is about 10% of purchase price. You're talking about 40% of somebody's purchase power a year ago is less than what it is now. So, I mean, like if you do the math, it makes sense that like our market, if you're above 500,000-600,000, which is our average is 270. So if you almost double that average, if you're out of that bell curve, those properties tend to sit a little bit longer. Now, recently they've gotten really hot again, but it's something that there for a while they were sitting there coming down in price, and those houses only get maybe 1 or 2 offers, whereas anything that's 400 and below gets 10, 15 offers.
And I think you when you bring that up, that's another good point, because if you think about it, that didn't mean that the market dropped, like in San Diego, if I just focus on that didn't mean that the market dropped by 40%.
No, just
it dropped at the highest about 15%.
Oh.
Even though the rates, right, went from 2.5 to 6.5 or even 7, right, at one point. The biggest I've seen it was about 15%. So again, it's being very conservative with what we're saying here. However, if you use that to your advantage when you're negotiating, that's why whenever I have some data that I can use to my advantage when I'm negotiating, I'm going to use it.
Yeah.
That's what I look for. So if I see a negative trend, I'm going to use it to submit lower offers, right? If I have a positive trend, I'm going to keep it to myself. I don't necessarily have to disclose all that information, right? But I'll be a little bit more aggressive on my purchase price, right? Because I see something more positive. And usually that will be me calling pendings and finding out that they're closing, at a 2-3% higher than the last sold comp. Like that type of data, right, will allow me to be more aggressive. Do I need to disclose that then to the listing agent? No, like I don't need to, because that's not going to help me. That's actually going to hurt me, right? So I'm always looking for information that will allow me to negotiate better, basically. Okay, that's it.
That's the best way to do it.
Any comments, questions, or just anything? It doesn't have to be on this topic even.
Hey, this is Wade. One thing that I'm seeing, I'm putting offers on market properties. I'm talking specifically on market stuff.
Yep.
As far as offers for the on-market stuff, and I've talked with a bunch of people in my other groups too, and it seems like that the fixtures on market are not being bought up by flippers or wholesalers. And what I mean by that is they're getting like 19 and 20 offers.
Yeah.
And the offers from flippers or even wholesalers were getting laughed at. And I've spoken to a couple, like I've tried to follow up, and some of the agents have been real nice to me. So they've kind of told me what the deal was. For example, this last one listed for 570.
Mhm.
I put in an offer for I think it's 515 for that one. And I got pretty much laughed at. And when you watch the market price, it actually did a market adjustment or it changed price and it went up. And I think that's because trying to make an appraisal or something like that. But that seems to be pretty common. And Kevin, I don't know what you're seeing as far as the offers you're putting in on market stuff, but it seems like on market fixtures are being bought up by families with
buyers.
loans, people trying to do
Yeah.
their own thing.
So. and
Yeah. Pretty much what you're saying, Wade.
Are the stuff that you're offering on, is it able to get a loan on it? Are there bathrooms, toilets, sinks, vanities?
99% of the time, yes.
So that's why, because if
Yeah.
you can get a loan on it, and I'm talking to a retail buyer and I say, hey, look, we can go in, you can get a loan and you can have a really high offer. And you can get a loan on the property, then you're getting a property less than market value, even if you have to put work into it. Even if you're buying it at, let's say 600 needs 50 at work and the ARV 660, they're building up a little bit of appreciation. So as a realtor, I have that conversation. If we offer on stuff on market, at least locally in Cincinnati, we're looking for stuff where nobody can go in and get a loan on it. So it has to be a cash buyer. And then we're competing against other cash buyers. There's no toilets in the bathrooms. There's no shower pans. The kitchens don't have working plumbing, something that's going to keep it from being able to go conventional. And then we go in, or even a FHA 203K loan. Then we go in and we offer on it, because we're not going to I can't compete with somebody who's going to go in and put in new carpet and paint and make it, you can kind of put lipstick on a pig. I can't compete with that. What I can't compete with is when nobody else can put that in there. And then I can stand out amongst the cash offers by figuring out what the seller needs.
I agree. At least in San Diego County, I'm not seeing that. Since I've been tracking this stuff, I'm just not seeing it.
So Wade, it's gonna come down. Inventory has to increase
Yeah.
for buyers to pass on the ones that need work.
Yeah.
Because, I deal with retail buyers too, right?
Sure.
And I
Right.
can tell you from experience, when there's a lot of choices, most buyers want renovated homes. They don't want to
Right.
deal with renovations. But when inventory is tight and that doesn't even exist, guess what us agents are doing and telling our clients, saying, look, what's your tolerance for doing a little bit of some handyman stuff?
Yeah.
Well, I have an uncle that I can get him to paint and whatever, right? Where maybe 4 months ago in December of last year, November, like they didn't want to look at anything with me that needed work, right?
Yep.
But now their tolerance level is going up because otherwise there's not many options. And guess what they're buying? Case in point, properties that need work, and now the investors kind of left on the sidelines, right?
And that's why you go for something that can't get a loan, because it takes them out of it. Like if I have a buyer that wants to look at a house and I scroll through the pictures and the bathroom doesn't have a toilet, I go, unless the seller is willing to put a bathroom in the toilet, a bank won't loan on it. I mean, it's a dumb stipulation, but bathrooms have to be operable. There's stuff that keeps it from going conventional. So we look for that kind of stuff where a conventional buyer can't purchase it. And then that's when we go in and make the move for it. But
And Eric, to that point, I mean, the properties that I'm seeing on market for fixers, most of them are able to get a loan. And I think my personal opinion, the reason because of that is there's so many wholesalers and flippers that are marketing in San Diego County.
Yeah.
If someone has a property that can't get a loan, I think they're going to, because we have commercials. I see a commercial from GG Homes about every other day from iBuySD. And I think they're calling those guys because I'm on the buyer's list for some of these guys. And I'm getting text messages and emails every day with like 10 or 20 properties. So
yeah.
I don't know if those properties that can't get a loan, I don't think they're really making it as far as the market.
And that's more than likely, like that's what we run into here in Cincinnati is most stuff that is in bad enough condition doesn't even get tossed on the market. Because most agents don't know how to handle it. They don't know how to price it. They don't want to walk it. It's disgusting. They don't want to have all of the, hey, sign a disclosure before walking this house because you're going to fall through the floor. Like there's not a lot of that. So you have to kind of try and pick and choose, but on market, like Randy said, until inventory changes, it's really tough because I have buyers that are looking for something. If I can say, hey, I get it, that house is disgusting, go in, put $10,000 in, and you're building in some equity along with it, and you're actually getting a house, they're gonna take it, especially because there's just nothing out there. I
Yeah,
mean,
what I would do in this market, Wade, I would really figure out, one strategy to do off-market marketing, right?
And that's where I put 70% probably of my attention now is off market, trying to find off market stuff, letters, postcards, driving around, door knocking, things like that.
Yeah, that's where you're gonna have to find it in this market until inventory opens up. And then also just building relationships with agents, I think is key because they do happen where listings will go to agents that sellers don't even want to go to market and they have to sell as is.
Sure.
And those are, again, another way of getting something where no one else is competing with you because of your relationship, right?
Yeah, and when you get those opportunities, knock it out of the park for the agent. Because if you, like, I have agents now that call me, and if it's a house that needs work and they don't feel like listing it because it's not going to go conventional or something, they call me before they call anybody else and they go, hey, can you get one of your investors to come in, take a look at this? It needs work. What are your thoughts? What's the highest price you can get? And I just walk it, let them know where we're going to be. If it doesn't work for the seller, and they're like, that's not going to work. Honestly, I send them to another person who I know would probably pay higher than we will, just because I know their ARVs. I'm still helping that agent, and because of that, I always get first look at it. So I always get the first opportunity of throwing in a cash offer for my client, for my buyer. And then if it doesn't work, I try and help them throughout the process and say, okay, well, I've got somebody else who maybe they're buying it for a buy and hold, and their numbers can go up a little bit more. So
and you're in San Diego, Wade. So, Cincinnati, I don't think you have this. I think I asked you this, Eric, but I would go to caravans, see if you can go to caravans once or twice a week. You're an agent, you're allowed to go. Your purpose is different, right? Your intention is there to meet agents and let them know what you're there for, and raise your hand when they ask, hey, are you a buyer or are you working with a buyer? Well, you raise your hand at that point, like, oh, I am the buyer and I would love for you to represent me. I'm looking for blah, blah, blah. Right?
That's a good tip. I mean, that's a great point.
If you do that consistently and show your face consistently, not like once you drop in and leave and then don't come back in 3 months, then we'll even remember you. Right? So pick one, go to a couple, see which one you like, stick to it consistently. So you start getting to know agents, they start getting to know you. And I guarantee you, after a while, you're going to have 1 or 2 agents coming up to you afterwards saying, look, I got an off-market deal. I have one falling out of escrow. I need a quick closing. Can you do this for us, Wade? Right? That's what I did. When I was new in the market here, man, I took advantage of these caravans because literally the board of realtors would bring the agents in one room for me. I mean, they're doing the hard work. I just show up and raise my hand.
Yeah.
And everybody I talk to right now is an investor. The amount of clients that I talk to, they're like, I'm looking to pick up a 2 to 4 unit or a flip. Dude, I would say maybe 3 to 4 clients, legit clients a week that come up to me in Cincinnati and say they're looking for deals. And I'm just like, join the rest of them. Like, I'd love to help, but here's the 70 other people I'm looking for deals for. So you have to try and figure out a way to stand out for the agent, but also in your market. What's working? Like, I know Dylan, who we brought on here a couple of times, he's like killing it with direct to text or direct to seller text. And that's what he does. And he's getting the majority of his deals that way. Now there's thousands of them going out and the follow-up is ridiculous, but he's doing something that nobody else in the market is doing. So he's found a little niche where nobody else is at. Because if you're sending a mailer, aside from this, if you're sending mailers, you're sending mailers with 15,000 other people, especially if you're doing it on like a probate list or an estate. Like, anything like that, or a pre-foreclosure, you're joining one of the other hundreds of investors that are mailing out to that. So that's why we talked about that one time, niche it down as small as possible. Find the one subsection that they have a motivation to sell and nobody else is considering it, and then mail to them. And maybe you send out less mailers and get a better return.
And you couple that up with a door knock, right?
Yeah,
right,
Again,
yeah.
so it's not just a mailer, because I can tell you most of the investors that do a lot of mailings, they probably are not doing door knock at the same time, right? They're just blasting out thousands of mailers, right?
And you're an agent, so pick up a listing at it too. And do you know anybody
Yeah.
whose house needs work on the street? Is there a neighbor's house that is an eyesore every time you drive by it? What's the address? Cool, I'm gonna go knock that next. You knock on their house and then they're like, yeah, we're not doing a cash deal. So have you considered selling? You know, I'm also an agent. I can give you a cash offer, or I can tell you what you can get on the market. So
All right, I gotta run. Gotta help my wife here. We got toddler and a 3-week-old. I heard
Oh.
both cry just recently. It's not a good sign when you hear both of them crying at the same time, and your
Yeah.
wife is the only one there. All right, guys, thank you so much. See you guys.
Thanks, everyone.
in a
See you
couple
guys next
weeks.
week or 2 weeks
All
from now.
Bye.